Welcome to the Keiser Report. I'm Max Keiser. Sanctions on, sanctions off. Isolation will work. Isolation has not worked. Bleh! It says throw to Stacy. I said throw up to Stacy. And then I went bleh! And then Liam Halligan, our guest today, says that's a horrible word in Russia. Apparently it means something bad. But, you know, when I think about David Cameron in the House of Commons declaring open war on Russia, I would say bleh! To David Cameron. That's my message to David Cameron and George Osborne. Bleh! Which everyone in Russia knows is what I mean. Go ahead.
Okay. Well,
Speak
Max,
to me.
the point of this Keiser report is a special on the ruble and the economy of Russia. But first, I mean, it was a historic event this week when Obama restored diplomatic relations with Cuba. And one of the quotes he said was, "Isolation has not worked. It is time for a new approach." But the very same day, Liam, he signed new sanctions on Russia. So will isolation work for Russia, even though it didn't work for 50 years on Cuba?
I mean, yeah, it's a pretty big moment. We've also got the EU cranking up sanctions again in the middle of what's still a fully blown currency crisis. We've seen the ruble strengthen a little bit from the incredible lows of 80. But clearly it seems now there's a direct link between what Western policymakers are doing and what's happening in Russian currency markets. The question, largely unspoken, but on everyone's minds, is that link deliberate?
Yeah, but they're gearing up now for a currency war in a big way. So Elvira, with the woman with the glasses, she looks like a librarian. She's got the heart of a tiger.
The governor of the
How do you
central
say
bank. Nabulina.
Nabulina. Elvira Nabulina. Okay, she's Janet Yellen's counterpart. Okay, they've authorized now the central bank to pick up some real tools and weapons in this, as Warren Buffett calls them, weapons of mass financial destruction. So the ruble is 1% of global forex, which is a $5 trillion a day market. They want to get that up to 3, 4, 5%, and they can use it now. Elvira's got all the tools that go forward. David Cameron in Question Times yesterday said that he's happy he attacked the ruble because it got nowhere on the ground trying to invade Russia via Ukraine. So now he's going to attack them with in the currency market. So now we're going to have a real currency war.
Well, Liam, what do you think of this? Putin himself, in his press conference this week, said that financial speculation is not a crime. But what should the central bank be doing to stop? I remember during the Asian financial crisis, Hong Kong, for example, raised their interest rates to almost 100% to stop the financial speculators.
As did Russia in '98, of course. We had 150% interest rate by the Central Bank of Russia to try and stem what was then a really serious crisis. I don't think we're in a '98 situation yet. Maybe we can discuss that. I actually think, even though the interest rate move that we have seen has been dramatic, from 10.5 to 17, of course, the 6th interest rate rise so far this year, the central bank hasn't actually fired its big guns yet. We have had a little bit of currency intervention. It's mainly been the conversion of the Ministry of Finance's existing on-the-book surplus from rubles from dollars, into rubles. You've also got the reserves, the $450 billion reserves, depending on how you defend them, not only at the central bank but also in the so-called stabilization fund. The stabilization fund that was created from oil revenues over the last few years precisely for this moment. We've only seen single-digit billions used from that. And that's why a lot of people have been... So we got to 80 and they still didn't fire the big bazooka. It suggests to me that there's some pretty strong nerves at the Kremlin at the moment. And I think what Putin... The point he was making in his Q&A this week, he was saying, you know what? You think we're going to go for capital controls, but we're really not, you know. We really want to keep this market open. And if you think Russia's had an open capital account almost uniquely among the big emerging markets, as you often mention on Keiser Report, since 2006, India hasn't gone open capital. China's sort of moving towards it slowly. And I think if you do have capital controls, that's going to undo a lot of work that's been done structurally to try and create an international financial centre in Moscow.
It was also quite clear that he will not, or the Kremlin doesn't want the foreign currency reserves depleted in order to, basically benefit the speculators. But you brought up '98, and that of course was caused by a balance of payments crisis. There were huge debts in the country. Yeah. Now there are none. As you say, there's a huge surplus. So all the normal ingredients of a currency crisis are not there.
Sure, there's a huge surplus. Obviously, in '98 there was a big current account deficit. In '98 there were almost no reserves. In '98 oil dropped from I think about 25 to about 13, 14. So a similar percentage drop, but at much lower levels. The banking system is much more stable than in '98. It exists. Russia has access to all kinds of finance that it didn't have before. But it is. I do think there are reasons to question. I don't think it's pure speculation in the currency market. There's a lot of momentum, algo trading going on, of course. But there are legitimate questions because the budget, for one thing, though we always say, and we're right to say it, that the government's liabilities are in rubles, so this kind of helps it, and a lot of its revenues are in dollars, because a lot of the export revenues, of course, are oil and gas, which are priced in dollars. Having said that, the budget will suffer a bit. The current account will, of course, suffer from a lower oil price. And while I don't think we will get capital controls, we could get some tinkering at the margins. For instance, what we've seen in the past is if you have export revenues in dollars, which a lot of them are, you can then put limits on the extent to which those exporters are able to keep their balances in dollars. They may have to convert a certain percentage of those to rubles, and we're talking about big amounts of money. And a lot of these exporters, of course, are, if not majority state-owned, and the state has some influence over them through licensing and so on.
Right,
so I couldn't rule out something like that.
We're kind of in an era now where these banks have dominion and power above the state. So Goldman Sachs, J.P. Morgan, and HSBC.
But not in Russia, Max, because of course the biggest banks are Sber and VTB, which are both
Let me get to my question, which is
Sorry.
that we live in an era where these big Western banks have more power than governments. And we saw what happened in Greece when Goldman Sachs colluded with insiders to destroy Greece and to make a huge profit for themselves. So my point is, as you were getting into there, is that Russia now they just freely floated the ruble.
Yep.
They're now in the Forex market for real on a daily basis. They're now graduated from, this is really the moment after the 1989-1990 transition out of Soviet Union to the Russian Republic. Now they're entering for the first time the real big boys game of Forex.
That's right.
So now, how do you foresee their success? It seems like they're putting the tools in place, and so far they're making the right moves.
Well, to put that into context, by the way, the Forex market, for people out there who don't know, is a $5.3 trillion a day traded. In that market, 85 billion in rubles is traded per day. So it's a very tiny, small percentage. So is the liquidity issue also, I assume?
It's small, of course, but the potential for ruble-yuan trade to become it's only going to go. It's going to be a petro trade. You're going to have a situation pretty soon, Max, where the world's biggest economy, namely China, which it will be, and the world's biggest energy exporter, which it already is, Russia, are doing their currency, their energy deals not in dollars. And that, of course, raises all kinds of implications for dollars' status as the reserve currency. Of course, it will stay a reserve currency. So if the ruble does take its place on international capital markets as a fully convertible, non-supported, freely floating currency and becomes part of people's reserve baskets, which many analysts think is inevitable, along with the rupee, real, and so on, then that is the end of hegemony. And that's a very important moment, and the West will fight that.
The UK economy is $2 trillion in size. And I'm sorry, the Russian economy is $2 trillion in size. The UK is $2.5 trillion.
Okay.
Okay. So, but the pound is in the top 4 most traded currencies in Forex, and the ruble is in the top 12.
Sure.
So they've got room to go from number 12 up to number 5 or 6.
Okay, but let's also talk about other things that Putin mentioned. He basically said that South Stream is dead, Blue Stream is alive. So what about this? Turkey is now going to be the end point for this new, what about the currency and gas and energy politics? Where does that fit into this?
Well, I think what's worth pointing out, Stacey, because of course the political rhetoric is now cranking up seriously with Western politicians unwisely, in my view, almost scrambling to take credit for the demise of the ruble. This is really not statesmanship. This is incendiary.
Yeah. Even all the journalists too.
To do this, it's incendiary. But what we have seen in the last few months, of course, even though Russia's been isolated. We've seen two big energy deals with China, and then recently, when Putin went to India, of course, we saw a big energy deal with India, and we had the prospect, Modi pointed out, not least on Twitter, in Russian, of India joining the Shanghai Cooperation Organization, which is geopolitically very, very interesting if that happens.
And yet every night on Newsnight, every single night, you hear them say over and over that Russia is isolated. So, but it's remarkable
They do have some people on there. I was on Newsnight a few nights.
You were a guest, but they still
did phone me. They did phone me when I was having a curry, and I had to run home in about 5 minutes. But that's fine. They had me on. Fair enough. But you're right. The general narrative here in the UK. And across the West is that Russia's isolated. And of course, if you are cut off from the biggest capital market in the world, the US, you are, physically isolated. Yeah. Whether or not, but the word isolated suggests that no one else in the world agrees with Moscow to any degree, and everybody agrees with the Western line. And that, of course, is wrong.
And then finally, let's talk about the fact that everybody says, oh, their economy is too much about energy. It's 16% of GDP. Norway is 20% of GDP. Yeah. But I do know that Russia is also the second largest weapons manufacturer after the U.S. But the U.S.
So they're well positioned for upcoming conflict.
but not that. But more importantly, I think the fact that the most acknowledged around the world, America excels at Stanford, MIT, the Silicon Valley. That is totally united with the weapons
it's
industry.
A corollary of it,
so
isn't
why
it?
doesn't Russia have that?
It's a development. Obviously, a lot of the biggest innovations that we see come from defense.
Why don't they have
I think you're seeing some of it. I mean, Russian tech firms have done extremely well. Yeah. A lot of the founders of Google, etc., Vkontakte, Yandex. These are world-class companies. They just happen to be in Cyrillic, but that's still a big market. That's the 5th most spoken language in the world, and they will become major money spinners for Russia. I do think, though, even though yes, as a percentage of GDP, oil and gas has fallen a lot, it's still too much a part of exports and too much a part of the budget.
All right, we're going to cut it off there. Lee Halligan, thanks so much for being on the Keiser Report.
Cheers.
All right. Stacey, thanks so much.
No,
yeah, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to speak with Konstantin Georgiev over there in Dublin. He's a professor, a columnist, a businessman, and he was born in the USSR. Konstantin, welcome back to the Keiser Report.
Delighted to be with you, Max.
Konstantin, tell us about the ruble. What the frick is going on? What are the consequences? What's next? Konstantin.
Well, we have a really exciting times right now in Russia vis-a-vis the ruble and the currency crisis that is going on. It's a textbook classic example of what's happening in a currency crisis. We had the first blowout earlier this week. We started on Monday, it continued into Tuesday. Russian ruble has hit over 100 rate to the euro. Devaluation of the ruble has gone over 50%. It far exceeded the decline in oil prices. And then things kind of calmed down. The central bank intervened very aggressively into the markets. The Ministry for Finance and the Ministry for the Economy stepped in as well. And there was, again, classic response to the crisis itself. Now we're witnessing ruble trading kind of sideways, if you want. Probably we're looking at the lull in the storm. It's an eye of the storm, really. And because the underlying conditions for the crisis are still present there, they still haven't gone away. The big question, of course, is where the ruble is going to head from here. Is it really being oversold, or is it still has some room to the downside? A lot of that depends on oil prices, but a lot of that also depends on Russian government actions forward.
All right, now, Konstantin, the Forex market is a $5 trillion per day market dominated by the dollar, the euro, the yen. And this is really new territory for Russia and the Russian ruble and the Russian central bank, because up until now, the ruble and the Russian economy has been somewhat protected. They haven't really been on a day-to-day basis involved in the Forex market as such. So isn't that correct? So in other words, this is kind of a baptism by fire, because it was recently allowed that the ruble would be allowed to trade freely on the Forex, and it stuck its nose out, and it got hammered. But I think that's a good lesson. Now, going forward, I think they're the central bank in Russia and the forex traders. Russia is going to try to become a bigger factor in the forex market, and now this is the way forward. What do you think?
Well, no, you are completely correct in that context. It's very difficult to say how much of the bloody nose has been caused by the entry into the forex markets in terms of the free float. Russia has aggressively moved into the free float, in part because it was planned originally. They were planning to go into free float for the ruble at the end of this year anyways. They sped the process up by about a couple of months, in part because there has been significant pressure on foreign exchange reserves, and they are rightly, in my view, conserving those reserves for the future, because going forward, Russian economy will need very significant investments. It will need significant allocations of funds for the redemptions of debts and bonds of the corporates and also of the banks, which are impacted currently by the sanctions. So as a result of that, the speeding up of this entry into the market has been correct. The timing of it has been very unfortunate. This is almost a perfect storm from the currency point of view, from a currency crisis point of view. And of course, you know, again, the way they're managing it right now seems to be maturing, developing over time as well. For example, if you look about a month ago, the Central Bank of Russia was issuing fairly conflicting statements about the relationship between its support and willingness to support the ruble versus how they're going to address the issue of the interest rates vis-a-vis the overall economy and investment in the economy. They're kind of changing that tack right now. They're moving away from it. And there is a very right and correct, in my view, realization that the foreign exchange reserves need to be preserved.
Yeah, I was very interested in the comments of David Cameron, the Prime Minister here in the UK, at Prime Minister Question Time this week. He stood up in the House of Commons and said that we have a ground offensive against Russia moving into Ukraine. We have a ground offensive against Russia, working with the U.S., putting tanks in Estonia. Now we have a financial initiative against the ruble, and he essentially alluding to the fact that it was his traders in the City of London working with America that attacked the ruble. And then today, or this week in Putin's press conference, he said that financial speculation is not a crime. So it sounds as though David Cameron's posturing, the great peacock that Cameron is, was met with a stony wall of silence. And I think the attitude in Russia now is, bring on your weapons of mass financial destruction, you putz. We're ready for you. What do you think, Cameron?
President Putin today very clearly stated that in his view, 25 to 30% of the current crisis is really accounted for by the combination of the Western sanctions. He's probably correct. It's somewhere in that neighborhood. Sanctions themselves had an impact only in terms of the cutting off the funding for Russian banks and Russian corporates in the international markets. That in return triggered redemptions of bonds and debts. And there are significant debts. If you look at the next year forward, $101 billion is repayable by Russian corporates and Russian banks in terms of the loans that they have accumulated abroad. Some of that is repayable to themselves effectively. So in a sense, some of that is not exactly the pressure on Russia as such, on the Russian economy, but quite a big chunk of that is going to the likes of the Netherlands, to the likes of Austria, to the likes of Swedish banks and French banks and Italian banks, and then to a lesser extent the likes of the UK, Germany, and Switzerland. So there is that kind of effect as well there of the sanctions. But beyond that, it really is a combination, okay? You are correct to point to the issue of the speculation. What you miss there is the extent to which the algorithmic trading, for example, and high-frequency trading impacts the currency markets. And the Russian ruble used to be a little bit out of that space simply because of the tighter controls by the central bank. Now that it is free float, it is open market for it effectively, for the algos to step in. And when you look at the volatility, especially in the US dollar-ruble exchange rate, that volatility is very kind of capped, but at the same time very fast moving. There is a very rapid change in terms of the prices and volumes traded, all indicative of very significant algorithmic trading. Now, is President Putin correct in saying that the financial speculation is not a crime? I would tend to agree with him, but then I'm a libertarian, which is very strange for a libertarian to be in agreement with President Putin. But he is correct. It's not, of course, a financial crime. The issue is, are the households and companies in Russia dollarizing themselves currently at excessive rate? In other words, is it the rate which is beyond what we would call rational and really is reflective of their behavioral fears, their behavioral concerns. If that is the case, and the central bank, for example, hinted at that very strongly as well yesterday, if that is the case and it is a behavioral, then the response to it is to try to alter that behavior, simply because the fundamentals which are driving that behavior are not necessarily consistent with the price and in the markets itself. So again, is central bank doing the right thing there by trying to calm the markets, by trying to change the repo, for example, eligibility of the collateral for the banks, the mark-to-market accounting rules and procedures as well that it accepts from the banks? I think they are correct. This is a crisis. They're trying to address it through all of the, if you want, tools and weapons in their arsenal that they have. That's a smart move.
Yeah, in other words, they came along and they said, we're going to change the rules for collateral. We're going to change the rules for mark-to-market. We've got an economy in Russia, which is a $2 trillion economy with almost no debt at all, with a positive balance of trade. If you want to go to war with us with your algorithmic trading and attack the rubles, we can leverage up considerably here, and we can bury the pound, especially if we're working with China, our partner. We can bury the pound. So is David Cameron being an idiot by tempting the bear, in other words, he's going to lose in the Forex market, just like he lost in Ukraine. He's losing everywhere in the world. He's the most overrated leader in the world. Is he now going to lose in the Forex market, Konstantin?
Well, I wouldn't use that strong of a language about Cameron, but I would say that Cameron's statement is inconsistent with his own policy objectives. If Cameron's policy objective is to effect change in Russia in the political spectrum, the last thing Cameron should be doing is trying to claim credit for the mess that is being going on right now in currency markets over there to himself. Because all it does, it reinforces the position of the even more nationalistic circles of Russian opposition. It even more solidifies the support for President Putin in Russia, simply because Russian people look at it and say, look, Prime Minister of Great Britain is admitting himself that there is a huge problem there that they are causing. So as a result of that, Cameron is not really acting smart by trying to claim any credit there. Interestingly enough, you mentioned the current account and trade deficit, and this goes to the heart of the arguments that are flying right now across the Western media, that Russia potentially is facing 1998 moment when it defaulted on the post-Soviet and Soviet period debts. And that is a crucial difference today. Russia is currently running current account surplus. It was in deficit then. It is running fairly strong, almost 3% fiscal surplus, while it was running massive deficits back in the 1990s. Government debt is minuscule. I mentioned $101 billion repayable next year by the companies and banks. The government debt repayable next year is $2.1 billion. As you mentioned, that's against the $2 trillion economy. It's tiny debt. It is totally sustainable. It is totally outside of the question of being anywhere near default. And yet today we have the Telegraphs writing about the possibility of the Russian sovereign default once again.
Right. Well, they're typically looking in the rearview mirror. They're not forward thinking. They're not smart over there at the Telegraph by any measure, except for Liam Halligan. He's the only smart guy over there. But let's talk about oil for a second. What price barrel of oil is key? In other words, the West is saying that oil has to be at $100 a barrel, or else Russia is kaputski. Or is that really overstated in terms of a factor? Because, of course, the oil is only 15% of Russian GDP. It's 2/3 of exports. Yes, that's true. But what about the price per barrel of oil? Where are the key levels there, Konstantin?
Well, we have 100 marker, we have 80 marker, we have 60 marker. All of those markers in terms of the price of barrel of oil are bogus in the sense that Russian budget, the original Russian budget published earlier in the fall this year, estimated the barrel of oil at 3,500 rubles per barrel. That then ties into the exchange rate. So if, for example, the barrel of oil in the market trades at 70, that means that the ruble-dollar exchange rate is at 50 in order to balance the budget. Now, the issue is, of course, there is an economic impact of that beyond the fiscal side. And here's the issue comes in terms of the price of oil. Last week, the Central Bank of Russia published its own estimates and the forecasts for the economy. And they are saying that if oil averages at about $80 a barrel over 2015, then the Russian economy is likely to contract by between 0.8 and 1%. Now, let's put that into the perspective. In 2012, 2013, Eurozone economy contracted by more than that. So it's not quite the crisis or the meltdown. However, if the price of oil drops to $60 a barrel, and this is not a spot price, this is average over the entire year, and I'll return to that in a second, then Russian economy can contract by between 4.5 and 4.7%, which is much more significant contraction on GDP side. Now, what does it mean in terms of the 80 versus 60 average price for a year? Current consensus estimate from the IEA, published literally about 2 weeks ago again, suggests that we can expect the average price of oil next year for Brent to be around $80 a barrel. So again, there is an expectation that oil will firm up a little bit, and this expectation is not coming out from Russians. So as a result of that, I'd rather stick with the forecasts coming out of the IEA on that side.
All right, Konstantin, fair enough. Thanks for being on the Keiser Report.
Thanks a lot, Max.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Liam Halligan of The Telegraph, and BNE.EU, very fine magazine, and economist Konstantin Georgiev. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.